Wells Fargo, one of the largest banks in the United States, has released its fourth quarter 2024 earnings report, which exceeded analyst expectations. The bank's strong performance was driven by improved net interest income, reduced expenses, and a lower-than-expected provision for credit losses. As a result, Wells Fargo's shares jumped significantly, with investors reacting positively to the bank's strong earnings report and optimistic 2025 guidance. Key highlights of the earnings report. The earnings report revealed several key highlights, including net income. Wells Fargo's net income rose to $6.1 billion, or $1.38 per share, exceeding analyst estimates of $1.12 per share. Net interest income. The bank's net interest income increased by 5% year-over-year, driven by higher interest rates and loan growth. Expense reduction. Wells Fargo's expenses declined by 3% year-over-year, reflecting the bank's ongoing efforts to reduce costs and improve efficiency. Provision for credit losses. The bank's provision for credit losses was lower than expected, reflecting improved credit quality and a reduced risk of loan defaults. 2025 guidance. Wells Fargo's management provided strong guidance for 2025, including net interest income growth. The bank expects net interest income to grow by 5 to 7% in 2025, driven by continued loan growth and higher interest rates. Expense reduction. Wells Fargo aims to reduce expenses by an additional 2 to 3% in 2025, reflecting ongoing efforts to improve efficiency and reduce costs. Return on equity. The bank expects to achieve a return on equity of 12 to 14% in 2025, reflecting improved profitability and capital management. Implications for the banking industry. Wells Fargo's strong earnings report and optimistic 2025 guidance have significant implications for the banking industry. The bank's ability to generate strong net interest income, reduce expenses, and improve credit quality reflects the industry's ongoing efforts to adapt to a changing regulatory environment and improve profitability. Conclusion. Wells Fargo's shares have jumped significantly following the bank's strong earnings report and optimistic 2025 guidance. The bank's ability to generate strong net interest income, reduce expenses, and improve credit quality reflects its ongoing efforts to improve profitability and capital management. As the banking industry continues to evolve, Wells Fargo is well-positioned to remain a leader in the sector, driven by its strong financial performance and ongoing efforts to adapt to a changing regulatory environment.